Good afternoon, everyone. I want to take some time and send out at least a couple videos. I'm going to send them out over the next couple of days because there's a lot of information I want to cover. And rather than putting it into one long video like I did last time, I'm going to break it up into smaller chunks so they're easier to digest. And you could maybe watch them over the weekend or something like that. The market is, for the most part, settling down, but it's also ramping up in a lot of different ways. It's settling down from the initial shock of the tariffs, and the market is pretty much digested that, hey, we're going to start very high on these tariff negotiations, and then we're going to slowly work our way back down. Like, for example, the 50% EU tariff that recently got put on by the current administration. That's really, I know we don't like it sometimes, but it's basically a negotiating tactic to get the EU to get moving, especially with the EU because they're very, very slow in negotiating trade deals. It took them 5 years to negotiate themselves out of Brexit, and that's within their own like little community. So it's obviously a tactic that's kind of getting them to ramp up their decision making process. Same thing with there's like a recent tariff that kind of sent some shockwaves through about the 25% tariff on iPhones. If that does happen, it'll probably be negotiated down. Really, honestly, probably won't have a huge impact overall, just because Apple was planning to raise their prices anyway, so that's just an excuse to do it. So I want to make it very clear that for the foreseeable future, we're going to have more volatility in the markets than what you maybe previously used to. And this is a good thing and a bad thing. It's a great thing if you've got cash and you're adding to your accounts. It's a bad thing if you're looking at your accounts every day, which most of you know I never encourage you to do just because it'll drive you crazy until you get used to it. And by used to it, I mean numb to it. Having said that, historically, after we get through periods of increased volatility, what that usually means is higher valuations for the market. So the Nasdaq hitting higher, the S&P hitting higher, stocks hitting all new highs, and we're actually already starting to see that in the market already. So I'm going to give you kind of like some highlights that are going on. We'll start with, of course, our favorite stock. Oops, let me get this out of here. We'll start with our favorite stock, NVIDIA, which just released their earnings report yesterday. Earnings were very good. There was some concern from some of you guys and just from the markets that the ban of being able to not ship their chips to China was going to affect their numbers. It does a little bit, but again, these guys have a 15-to-1 demand supply ratio. So for every one of their chips, there's 15 people in line wanting to buy it. It's really not a big deal if China isn't in the picture just because there's so many other people that are going to buy these chips. For the most part, though, NVIDIA is near its highs, currently trading at a 134, hit 140 after the earnings report. It's kind of come down a little bit. What we're starting to see is companies like NVIDIA, Microsoft is getting close to hitting all new highs. Costco is holding very strong. I'm just going over some very common positions that are probably in your accounts. Guys, when Netflix was trading at 800 to 1,000, I was like, hey, you probably want to pick up some shares. If you did, we're up about 20% at this point. Meta is still a little depressed, but Visa and MasterCard are also holding pretty much at all-time highs. So those were good news. The market itself is pretty much rebounded from the announcement of the tariffs. It's kind of holding at this level now, and so has the NASDAQ. For the most part, I am going to be gravitating more towards the NASDAQ, more towards technology stocks, just because that's where the money is. All the boom is in artificial intelligence. It's not in much anything else. I mean, there's like a little bit in healthcare. There's a little bit in industrials, but it's very, very concentrated. And right now, because things are still a little uncertain because, we don't really know what's going on with the tariffs. There's always things that can change. Obviously, Trump isn't a guy that is going to play it steady for a very long time. He's always willing to just throw a wild card out there. And so there's obviously uncertainty in the market. I think that's why we're not hitting like all new highs. But for the most part, we are rebounding from the lows that we had pretty significantly and pretty quickly. So all the more reason to just stick with your investments. These are high quality stocks. I typically am not buying you junk. All of these stocks that I just mentioned, these have long track histories of earning 20% or more a year. Yes, they're going to be more volatile, but that's the price we pay for earning more, for not settling for that 6 to 8% return that a lot of other people talk to. And all of these companies I'm not worried about in the near-term future. So drops. So for example, right now, Apple is one of those stocks that hasn't rebounded because there is some concerns about the tariffs and how it's going to affect them. We're still going to be buying iPhones. It's not going away. Mac computers are still gaining market share over most other computers. So it's not at a low point yet, but there are some stocks that, for those of you that have cash, that I'm kind of just waiting to see how things are going to pan out, because we kind of got, like I said, a little bit of a wild card in the Oval Office right now. And this is going to bring us opportunity. And we can already start to see that with Apple, where we were at 260 and now we're trading below 200, and we've been as low as, the 180s. Okay. The same thing can be said with Amazon. Amazon's also one of those stocks that the tariffs can affect. But again, you fast forward 3 months, 6 months from now, Amazon is probably going to shrug all this off. We could be getting ready to experience a dip, with Amazon. For the most part, those are the ones I've got my eye on right now. There are some opportunities that are coming or that are kind of prevalent in cybersecurity. So I might start picking up shares of those companies in the near-term future. But for the most part, I'm going to be sticking with what I know. We don't need anything necessarily new at this point. There are some spaces for some new stocks. Planeteer is one I know a couple of you have in your portfolios. We picked up more, I think it was a couple months ago, and that's doing really well. Once I can find it. Here we go. Yeah, we were picking up shares here, in the 70s and 80s. It's rebounded into the 120 range. I know a lot of you have Planeteer, but I'm staying pretty narrow in my choices and in my focus. There's a few other ones here. Walmart has also been rebounding quite nicely. It's a good steady Eddie one. A couple of you also do have Roblox. Those ones are hitting all new highs, which is great. And we do have a few in cybersecurity here, CrowdStrike and Cloudflare, that are pretty much at their highs or very close to them. Okay. A couple ones that I've got my eyes on, I've mentioned a couple of these to you before with some of you, so those that have cash. Mercado Libre, I was talking to a lot of clients that had this when it was trading at about 1,800 a share. And I was like, hey, this is easy, a $2,400, $2,600 stock. And that's pretty much where it's sitting at right now in just a couple months. So for those of you that bought that, great, you're sitting pretty. Shopify is another one. By the way, Mercado Libre think of that as the Amazon of Latin America. The reason why I started gravitating toward that is because it's a huge growth market. It hasn't really been tapped into. Plus, it's pretty much isolated from the Chinese tariffs. There's not really like a lot of big effects that are going to happen with China and the tariffs and things like that with Mercado Libre. Shopify is another one that a lot of you have in your portfolios. This one is basically just online web services, online stores, pretty much for the most part, grab it through Shopify. So when you're doing online shopping, it's usually Shopify that's facilitating the transaction. The last one I really want to go over is Meta, because I know a lot of you do have Meta stock. Meta is also starting to rebound nicely. Some of you picked up some additional shares around these points. They're probably up about $100 since our last buy, which is really great. But this is just going to be another company that benefits from that AI space. It's very, very clear that AI is here to stay. It's going to be in everything from probably your refrigerator, obviously, to your TV, and clearly to your phone. So I'm tending to stick with those companies just because they're surefire bets. I'm not really looking for anything outside of that space right now. There's a few things here and there, but for the most part, this is where the easy money is going to be. Having said that, though, because these are technology stocks and it's a new technology, you are going to see more ups and downs in your portfolio. Just get used to it. Everything's fine. The world's not ending. Stay steady. You'll be nicely rewarded. Trust me.